Welcome, Dan.
Well, thank you for having me today.
Thank you for you joining us. Let's start by introducing you and your company.
Sure. So I work for a firm called Strategas Research Partners, or Strategas Securities today. And we're an investment research firm based in New York, and I run the Washington office. And what our firm does is we do investment research for institutional investors. We have clients in 45 countries around the world. And we have investment strategy, we have economics, we have technical, we have fixed income. And what I get to do is understand what's happening in Washington and how that impacts financial markets. And so what's Trump's trade policy, what's happening on energy policy, what's happening on tax policy. When I got in this business 20 years ago, the Washington policy was at the bottom end of the importance of the firm. And today it's at the top of the importance of the firm. And what we're learning is that policy decisions around the globe can have wide impacts on financial markets. And we're really trying to understand what those likely outcomes are going to be and what the financial market implications of those are going to be. And so what we're trying to really do is make investors smarter about probably some of these issues that they haven't really thought about. And I think that's important because the world seems to be changing. And there's a lot of transitional shifts that are happening right now. And that's why policies become so important for financial markets.
Yeah, especially recently, the Trump.
Yes.
Yeah, making a lot of interesting things.
Yes.
So we really understand what's going on. Especially, first of all, let's get started with the China-U.S. trade. Negotiation and U.S. and Korea trade. What do you think about that process, and what do you outlook for that?
Yeah, so let me just take one step back. What is Trump trying to do on trade policy? And since the Berlin Wall went down in 1989, U.S. policy has been globalization. The U.S. is 3 to 4% of the world's population. Go and policymakers would tell companies, go out there and get as much business as you can around the world, because that's 95% of the world's population. And I think what we've seen happening is that the world is changing and that there's a deglobalization effort going on inside the United States. I think COVID really compounded that. But I think there are other factors out there. The Trump administration believes that there are bad actors working against the United States' interest in, say, in China, and saying, okay, how do we break that dependence off there? And so when you look at what Trump's trade policy is, Trump is basically saying I'm going to put tariffs on countries around the world that the U.S. has given free access to the American consumer forever. And then, depending on how close you are to the U.S. in proximity or geopolitically, will determine what your rate is. So one of our added consensus views right now is that Canada and Mexico will be the greatest beneficiaries of Trump's trade policy. You would never know that because he's always yelling at Canada and Mexico. But they're located right next to us. And their tariff rate will be way below every other countries in the world. They're the only country that's not getting a 10% tariff rate. And what Trump's saying is, I'm going to put high tariffs on China, and I'm going to try and move those supply chains closer to the U.S. And I think over time, you'll start to see some of that migration. So that's Canada and Mexico. They're they're closest to the U.S. We have a very special relationship with the UK and Australia. In fact, those are the only two countries we actually share our nuclear submarine technology with. They're going to get a rate of 10%. So they'll have the second lowest rate. And then you have the core allies, I like to call it, which is Europe, Japan, and Korea. That's a 15% rate. And on top of that, there's investment commitments that have been made into the U.S. And we could discuss those investment commitments. And then what we have is after that is what's called the transshipment countries. These are countries that get a lot of Chinese goods routed through their country and then into the U.S. So Vietnam is a good example. They're going to have a higher rate. And then there's this last group. And their initials are BRICS, BRICS. Brazil, Russia, India, China, South Africa. They are working to undermine the U.S. as the reserve currency, and that's why their rates are higher. In the case of India and Brazil, their rates are 50%. So what I'm just trying to do is outline what the strategy is. There's a bit of a method to this madness that's overall. Okay. And so that then leads into your question about where China and US is now. And if you look at what Trump has done, he's got 47% tariff rate on China. Which is a pretty large tariff rate to go on. And what you're seeing is companies are migrating their operations now out of China, and they're moving into other areas. Not everybody, just to be clear. And then on top of that, what you saw is that you're having different types of policy changes. China wants U.S. chips. U.S. wants China's rare earths. And what we learned on April 2nd when Trump put out his tariff proposal is that both countries can hurt themselves, hurt each other really bad by restricting these goods. And so I don't think that Trump wants some sort of economic disaster. I don't think China wants some sort of economic disaster. So what they're trying to do is figure out how to decouple in a slower path. China's accepting the 47% tariffs. The U.S. is accepting some hits to them. But overall, China, you go build your chip industry. U.S., you go build your rare earth industry. But we're going to do it in a very measured decoupling way. And I think that's a sign that, yes, both sides wanted a deal, but it's a deal by necessity. And it's better to have a deal than no deal, because it could be a lot worse if we don't have that deal. So that brings us now to Korea and what we see with Korea. And I think the Trump administration is pretty pleased with how the Japan and Korea negotiations went over the last couple of weeks. There are definitely some friction points, but those friction points are now getting worked out. So for example, at one point Trump was talking about Korea having to put up $350 billion of investment. Extremely controversial. That number is now like $20 billion on an annual basis. And it's going to be spread out over a long period of time.
But still is total is 300.
Yeah, totally.
Totally same, right?
It's not 350 million tomorrow, right? And that's a big difference. So, and what you're seeing is general agreement on shipbuilding. Trump is very big into shipbuilding, but we're going to have a disagreement. Should the submarines be made in Philadelphia, or should they be made in Korea? Right? We're now dealing with the specifics. And the good news is we're not dealing with whether, we're dealing with how. And when you're dealing with how, those can always be worked out over time.
Okay, regarding that investment of 3,000, so 35 is 100 is a so big number, so it's difficult to. So if see the number, it's like Japan is 5,500. EU is something like 6,000, something like that. Korea 3,500. Looks like Trump regards Korea as the same level of EU and Japan, but actually we are much smaller than them.
Absolutely.
So that number is do you think is a little bit higher or bigger?
So one, I think you got to measure it as a percent of GDP, and it's probably disproportional, and that's why you're seeing changes be made. You also see changes being made to the Japan deal as well. So I think there's a practicality that's starting to come out in terms of the size of the number. And then the question is, what are you going to get for that number? Are you going to make an investment and get a good return on it? Because then it's not a cost anymore. Then it's an investment. So how that money gets invested. From my understanding, a lot of it's going to be focused on this new shipbuilding business. And I think that makes it a little bit easier to digest, because there's a commercial enterprise with a profit return that comes around on it.
Okay, second question is, normally now many Koreans argue is that there are some verbal agreements, and it takes a long time to sign some written documents. Is there something, what happened there? Is there something disagreement after agreement, or?
Well, you always get that with Trump. Absolutely. By the way, I know exactly what that's like. On every single issue, it's like that. But you take a step back, and these documents that are being signed, they're memorandums of understanding. And I'm not sure any of the trade issues, because they're so new, are going to be worked out perfectly. So you make adjustments as you get in practice. What you don't want to be doing is changing the terms and making it harsher for the counterparty one way or another after that agreement. But if it's a practical change, then it's not that bad.
Okay, another one is Trump will have some midterm election.
Yeah.
That election is influeed to this negotiation process.
Mm-hmm. So I'm not sure that it really matters.
Yeah, okay.
Okay, so there's a couple of things going on right now. One, Trump is imposing these tariffs by executive order. Those tariffs are now being challenged in the Supreme Court. So just this week, there was a Supreme Court hearing on it.
Yeah.
There's a very good chance that the Supreme Court are going to rule that those tariffs are not permissible. But Trump has a completely legal way to resurrect those tariffs back up.
Some other ways.
So some other ways, and they're legal. And I think the countries know that.
Yeah.
I think in China's case, they really knew that, or they wouldn't have signed that agreement. Number two is you do have a midterm election coming up. You do have a Congress getting there. It's very unlikely that new Congress, even if the Democrats win, are going to be able to repeal those tariffs. And even if they are, then the president would need to sign it. So they would need a veto-proof majority. So I'm not really sure the midterm elections are going to matter for trade policy specifically. However, we had our first set of elections that were what we call off-year elections, but they are a very good leading indicator of what's going to happen in that midterm election. And the country has moved about 7 to 8 points away from Trump's political party towards the Democratic Party. And under those numbers, we raised our probability that there's a 75% probability that the Democrats will take over the House in next November. Midterm election years, which is what we're going through, are pretty volatile years for the equity market. So, what we like to do is look at what's called the presidential cycle. 4 years of a presidential term. Year two, the average intra-year decline, that's the midterm election year, it's about 19% decline.
Okay.
The other years, year 1, year 3, and year 4, it's about a 12% decline. So there's the politics of the campaign have an impact on the equity market overall. That's not a bearish sign. What we like to talk about is that the S&P 500 has not declined in the 12 months following a midterm election since 1938. So it's we're almost at 100 years on that test now. But why I'm bringing that up to you is that the politics of the two parties fighting weigh on equities. We anticipate that economic growth is going to get better next year. And the Federal Reserve will kind of slow down its monetary policy. But by the time you get to the election, the equity markets figured a lot of that out. And it's sort of off to the races after that.
I'm wondering, there are many speculation of the next Fed chair. As they're going to be a huge impact on the global market.
Yeah.
Any view on that?
Yeah. So Jay Powell is the current Fed chairman. His term expires in May of 2026. Historically, presidents like to make that appointment about 4 or 5 months before so that the markets can get used to who the new Fed chairman is. And that person will also have to go through Senate confirmation in the United States Senate. So I would anticipate in the next few months, you're going to see who that Fed chair is. Right now, the favorite is a guy named Kevin Hassett. He's the White House National Economic Council chairman. He has a very good relationship with Trump. Trump would like to see him become the chairman. There are other people who are running the process, like the Treasury Secretary, who Bessent, Treasury Secretary Bessent, who probably would like to see somebody like Kevin Warsh be the next Fed chairman. So there's a little bit of a disagreement probably within the administration overall. Obviously, the president, if he wants to pick somebody, he will. He's the president of the United States. But I wouldn't be surprised if you start to see some new names begin to emerge because there's been a lack of consensus on this. And what really gets to the heart of it is the president likes Kevin Warsh, but he probably sees Kevin Warsh as the second coming of Jay Powell, who might turn hawkish on him. And so the president's saying, okay, let's do some more interviews. So they're interviewed Rick Reeder from BlackRock, Governor Waller from the Fed, who I think is an excellent central banker, and Governor Bowman, who's also on the Fed, Michelle Bowman overall. But at the end of the day, I think it's really going to come down to Hassett or Warsh. And it's going to come down to a process where the president's got to look at who can get confirmed and how the markets are going to respond to that. If economic growth is going to accelerate and we're going to do all this stimulus, there could be inflation concerns next year. you probably want somebody who can manage both risks of employment and inflation overall. And I think that's going to be the deciding factor for who gets picked as the Fed chairman.
Yeah, many people talking about some of them is who gonna be is really matter. So some of them, or anyway, Fed is big institutions. So many people is getting some conclusion altogether.
Yeah.
So it doesn't matter. So what do you view on that?
I do think it matters. Like I look at somebody like Governor Waller, who's on the Fed right now. Governor Waller in 2022 believed that the Fed had the capacity to raise interest rates and not put the U.S. economy into a recession. That had never happened before. So his ideas sounded crazy. And he understood that there were these new liquidity facilities that we never had before, and that they can help sterilize the rate increase. So here's a guy who in a contrarian moment at the turning point in the business cycle was able to get this like really good out of consensus call. This year he came in and he said, look, employment's going to slow. The Fed should be cutting rates. And obviously the Fed chairman disagreed with Governor Waller because the Fed chairman was so worried about tariffs causing inflation. And Governor Waller, now that we're 9 months in, 10 months in, has turned out to be absolutely right. Again, out of consensus, at a major turning point, predicted that employment slowdown. So if you told me that Governor Waller was going to be the Fed chairman, I think it makes a big difference, even with such a large organization, and you have to move all of these committee members overall. So, that's an extreme example. And over time, you're going to have to change the composition of the Federal Reserve. There's going to be a lot of members on that Federal Reserve who are not going to want to be aggressive in cutting rates because of inflation right now. So I think your actual point is spot on, and the correct one is that even with a new Fed chairman, it's going to be hard to move the machinery around and be very aggressive in cutting rates.
What about Besant?
I've known him for a long time, and I think his name is going to continue to get floated out as Fed chairman because he has the president's trust. I look at and I say, okay, where does the president put his trust? And the president has high trust in his chief of staff, Susie Wiles. And then I would put the Treasury Secretary, Besant, at number 2, which is amazing because Trump doesn't trust anybody. But if you're the Treasury Secretary, you're involved in everything going on right now. You're involved in Russia sanctions, oil deals in the Middle East, the China trade deal being negotiated, and then all the great things you do at the Treasury Department. Right? Why would you give that up to go be Fed chairman? To me, I think that's a step down. And I think that's why the Treasury Secretary will remain at the Treasury Secretary.
Okay, great. It's really helpful. Let's move on some policy risk and the investor point of view, some how to handle that risk. Regarding that, what is most critical policy risk today?
So the way I think about it is policy environment's pretty good. Policy environment's pretty good. The Fed in August came to the conclusion that they're less worried about inflation, more worried about employment. And when that happens, it creates a rate cycle, rate cutting cycle. And so we anticipate the Fed's going to wind up cutting rates 5 times. They've already done 2. They've just ended quantitative tightening, so that should loosen financial conditions. So you have 2 very big levers being pulled at the Federal Reserve to ease financial conditions and kind of create conditions for growth. The second portion of that is that fiscal policy is extremely creative. We've just passed legislation that's giving companies the ability to write off any of their factory purchases, their capital goods purchases, and their research and development expenses. And as we get into February, March, and April, you're going to see a massive amount of tax refunds given to consumers. The incremental is about 0.5% of U.S. GDP that comes out in a very small period of time. So I'm talking about the Fed cutting rates, the Fed no longer tightening its balance sheet, $135 billion of tax cuts to business, and $150 billion of tax cuts to consumers. We are going to get stronger economic growth in 2026. That doesn't mean that it's great for stocks, because as you start to get that growth, the market will begin to anticipate that the Fed will have to slow down on its rate cutting cycle.
In your point of view, do you have something early signals, warning signal. You watch. What is that?
Yeah. So we watch a lot of things, but one, we have a measure of policy uncertainty.
Okay.
And that policy uncertainty risk is a really good indicator because when it goes up high and we have like a certain level where it reaches, you're usually going to get an equity market sell-off, but it's really bullish because whether it's 3, 6, 9, or 12 months later, stocks are higher every time, and by an average of 20% after 1 year.
Yeah.
And why I bring that up to you is that policy uncertainty and policy risks are bad, but it teaches the policymaker that they've gone too far.
Yeah.
So on April 2nd, Donald Trump proposed $700 billion of tariffs in 1 year. Yeah. We would have went into a recession immediately. And he tried to defend it for 5 days.
Yeah.
It was indefensible, right? So I'd say they burned their hand on the stove. Now they know what their limits are.
Yeah.
And that's why it's much lower today, and the range of outcomes are much shorter overall. So when we watch these policy risks, we're basically saying how far can you go out on that policy risk? And then what are the policy benefits? And that's why I started off your question saying, hey, look, there's a lot of good stuff that's happening right now. And it's sterilizing some of the bad stuff.
I see. I should meet you before that April.
Yeah.
Yeah. And the investor perspective, do you have any advice or something to manage this policy risk in U.S.?
Yeah, sure, I do. I mean, I think it's related to what we just talked about. The U.S. is going through a pretty big change. For 40 years, it's been one way. Globalization, low inflation, low interest rates, less geopolitical volatility. That period's over. There's going to be greater geopolitical volatility. There's probably going to be slightly higher inflation, slightly higher interest rates, and there's going to be less globalization. So you're going to see stuff coming out of the United States that looks very different than what you've known your whole life, and it requires an adjustment. But my point is that these adjustments are being done to create a more sustainable and prosperous free world around the world. And my guess is that you're going to see coalitions of countries coming together and working together to be able to create that prosperity. That's number one. Number two is that when they do mess up, and they will mess up, and it will look chaotic when they mess up, is that it's temporary. We have a lot of tools available to us to fix things. You don't want them to make the mistake, but if they do, we do know how to fix some of this.
Okay, great. Thank you for your coming today and having a time with us, and enjoy
Thank you.
The rest of your trip in Korea.
I will. Thank you for making it so enjoyable.